my investors know that I'm long only. To me, actually a one-way street. It's genuinely a vortex for the entire world's capital and all the money that exists out there. I think it is the greatest wealth redistribution that will happen of the modern era. And I think in hindsight, we will look back on it as being obvious.
All right, everyone. So on Empire, you obviously know that we talk a lot about the institutions coming into crypto. And that is why we are super excited to share that we are hosting the Digital Asset Summit. We've hosted this since 2019. It's coming up in London, March 18th to 20th. Don't miss your chance to get ahead of the curve. You can get 20% off with code EMPIRE20. We'll see you in London. This episode is brought to you by Toku. If you are planning to launch a token, already have a live token, are granting employees or contractors vesting token awards, or are just trying to figure out how to take care of taxable token events for your team, from easy to use token grant award templates through tracking vesting to managing tax withholdings, make it simple today with Toku. All right, everyone. Welcome back to another episode of Empire. We have Olaf Carlson-Wee, founder of Polychain, employee number one from Coinbase back in, I think, 2012, 2011, 2013?
Early 2013.
13, that's right. But Olaf, welcome back to the show, man.
Yeah, thanks for having me.
Yeah. So I think, so last time you were here was May 2022. The peg on USD had just broke, went from $1 down to like 30 cents, went back up to, I think it was trading at around 68 cents at the time of recording. Luna had fallen from like $84 down to $2 or $3. And I asked you this question, which was, you've been through many market cycles, right? Saw the crash of 2011, 2014, 2018, and now we can say 2022. I would love to just ask the same question that I asked you back then, which was like, what is your framing for how you view the markets today?
Crypto is most of the time in a bear market. Like when you just think about the amount of time you spend in the market, it tends to go up very, very quickly, and then sort of bleed out over the course of several years. This, cycle, so to speak, has played out several times. I just think it's patience. I think crypto is, in a sense, a relatively easy category to invest in that you just can sort of buy and hold. And there's very little counterparty risk if you do it right, because your only real counterparty risk is sort of a protocol. You don't have to manage too much exposure to lots of third parties that are holding assets or executing trades or things like that. But at the same time, it's easy for market participants to get really distracted and sort of short-term oriented. In general, people who have just had a long-term view in crypto, I think, have done the best relative to people who have tried to move really quickly and, get where they're trying to go in 6 months instead of over the course of, say, 5 years. I don't think it's that different. I've always been very long-term oriented. This is a big project. If we're going to replace the global financial system with software that nobody controls, it's going to take a while, but not that long. Like, it's come a very, very long way over the last 10 years.
Yeah. How do you think about just positioning as it relates to, I guess, both private and public investing? When you see what's happening in the market today, maybe it feels like the market's, maybe we're entering a new cycle, bull market is maybe kicking off either now or soon. How do you think about just positioning the fund?
Yeah. I mean, these are questions about like market cycles, but the reality is market cycles are a reflection of things that are happening, underneath, right? Prices are a reflection of the reality that's happening underneath. So, I don't think does it justice to think just in terms of like market cycles, right? So the reason that we are where we are today is because people built things that actually mattered. It's not like Bitcoin has just swung up and down randomly. You have the launch of Coinbase in 2012. You have the launch of Ethereum in 2015. You have the launch of a lot of the infrastructure around, DeFi and NFTs in 2018, 19. These bear markets, like, real things get built that lead to market cycles. It's not, so I think that paying too much attention to prices is like, you're kind of by definition following, other people who are paying attention to what's happening underneath. And that's, these real things that result in markets moving. So I think there's a lot of chatter in crypto about like market cycles and prices.
Yeah.
And I think it's all misguided. Like if everybody could just start paying attention to, real questions like what's the best way to scale applications that are embedded inside blockchains? That's a very complex question. And the answer to it will give you insights about the way the market's going to move or how to invest. If you're sitting there just on Twitter chattering about prices, like you're not going to beat the market. You're probably going to lose to even just like market beta because you're just distracting yourself and you're really misunderstanding fundamentally like why prices move. Prices are not random. They're a reflection of things that are reflection of basically market participants having insights of one type or another.
Yeah.
So, I don't spend most of my time on, so to speak, the markets. I spend most of my time looking at businesses and technologies being built and how those things are going. That then informs my view on markets and what to buy, what to sell, how to think about it. So, I just think if you spend your time on this kind of qualitative reality that underlies prices, you're going to have a much better time.
Yeah. Maybe we can go into some of those topics, but you brought up this idea of like the best things get built in the bear markets. You brought that up on the last podcast. We had, Coinbase. We've had Coinbase in 2015 bear market, 2016, OpenSea in like 2018. Uniswap. Maybe you could add that to 2019 as well. What do you think got built in this past bear market that really excites you?
So the entire suite of layer 2 so-called, that's a complicated bucket, but I would call it layer 2 technologies, zero knowledge cryptography based technologies. That's both for scaling and privacy. Projects like Celestia, projects like Arbitrum. Celestia is a data availability layer, so also sort of a scaling project.
Just got off with Nick an hour ago. Yeah.
Oh, great.
Yeah.
And then EigenLayer, is still in. It's not fully live at full scale, but I think EigenLayer is in the process of getting there. So a lot of these are kind of these core infrastructure pieces that are the result of years and years of fundamental research in cryptography, distributed systems, peer-to-peer networks, and how to best scale these things. I do think it's easy to forget that when you're not a crypto native and you're sort of kind of tinkering or just kind of testing out one of these apps, they're still pretty horrendously difficult to use. And there's a lot of hoops to jump through. And so I think that simplifying the user experience around these is going, it requires like real improvements to these technologies.
Yeah.
The other one that comes to mind is I would call it the next generation of these social finance experiments. So things like Friendtech and Tomo that are, adding a financial incentive layer to, the person-to-person interaction that already exists in like these social media applications. And I think that has huge potential. We've kind of gotten this attempts at this in small ways, like through Steemit way back in 2015, BitClout in 2021, and now this generation. And I think there's really something there.
Yeah.
It's sort of like Axie Infinity, right? It ultimately collapsed, but there's obviously something there, right? It to get as big as it did. So this is another category where I'm just waiting for the right team to have the right execution. And I think something is very big there from a consumer perspective. But those are the things top of mind for me that have launched over the course of the last year or so.
Yeah. Maybe we can just go deeper into L2s then, and just where, just like these, it's funny. We had a new employee start the other day and I was explaining the the first generation of the Ethereum killers, like the original ICOs, basically back in 2017, kind of that wave. But I think so. It's funny. So Blur launched Blast yesterday, and I think the general reaction was everyone's really sick of all these L2s launching. Right? Exchanges are now launching L2s. There's all these L2s, but I think people are quick to forget that. I mean, this kind of wave of L2s has only really been around for, I'd call it, maybe 2 years, you could say. I think Uniswap launched on Optimism and Arbitrum in summer of 2021, if I remember correctly. So it's really been only around for 2 years. What is your just like general framework for how you're viewing like L2s relative to maybe the AppChain thesis, which I thought was going to happen on Cosmos, but it looks like it's also happening on maybe the L2s as well, versus other ecosystems like Celestia and what they're doing with the DA layer relative to maybe what Solana's doing. What is your like framework for, I guess you could call this big bucket like the modular versus monolithic debate?
Yeah. So, we could spend an hour just on this.
Yeah, how much of that tea do you
have? Yeah, exactly. I think to summarize, in general, I think a kind of modularized stack makes more sense to me for peer-to-peer networks and things that are trustless. It also just makes more sense to me from like an engineering perspective. It's like, let's not depend on one system. Let's build lots of different systems that are interchangeable and can be optimized in each of their relative components, rather than depending on a single system. The only real downside I see to that is interoperability across applications. And it's, I don't mean to downplay the downside, right? That's a big deal. And one of the core value propositions of, web-based applications and also blockchain-based applications is that they're all freely interoperable. So I think that's kind of the big question is there's a certain simplicity to a monolithic architecture. It's just kind of like easier to reason about mentally. Ultimately, though, I don't think it works quite as well for long-term scale, and I think it presents a bit more like risk to the system. I mean, if we're going to build again like the global financial system on the internet, I broadly struggle to see that existing kind of on one piece of tech or like one network.
I get the risk side of that, but what's the like why doesn't it scale? Because wouldn't the argument be that it's actually maybe easier to scale on something like Solana?
So peer-to-peer systems, if you're going to have a resilient decentralized system where you assume that sophisticated, well-financed attackers have real motivation to take down the system or halt the system in some capacity. If you're designing with that framework in mind, which I think is the only way to design if you're building the global financial system, obviously, right? You can't assume everybody's nice and it's all kumbaya. You need mutually untrusting parties to be able to operate on the same substrate. I think that, scaling a system, I mean, we're getting into like a debate that is more properly explained very technically, right?
Yeah.
But at a high level, I think that it's very hard to scale a peer-to-peer system with billions of users in one kind of monolithic architecture. It makes more sense conceptually to me to break it up into different pieces that all sort of settle back later in a sense. So that's broadly where I stand on it. I do think I'm happy that we have the burbling chaos in crypto of every experiment being run simultaneously. It's the number one way to ensure that the entire thing works long term. And I obviously I have to invest and place bets on the way I think this future will play out. But broad brushstrokes, I care about the entire thing succeeding, like the entire project of crypto. And I'm glad that every single experiment is being run simultaneously.
Yeah. If I remember, did you guys co-lead the seed in DYDX several years ago? I think five
Yes.
years ago. So what I'm be very curious to just to hear what you think about like the app chain thesis, DYDX moving from what were they building on Starkware? Uh, I'm just curious how you think about like apps as they hit scale, moving on to like their own sovereign chains.
Yeah. So one of the original complaints about the Ethereum architecture is that every single application has to compete in one fee market,
Right.
right? And what that means is that the transactions or software executions that have the highest P&L for the end user end up getting bidded to the top of the kind of block auction. So it means that things like large derivatives trades, end up taking up block space away from, trading dog playing cards or something like that, right? Where the end user is not expecting P&L maybe at all. So I think that that argument, you know, like has real merit to it, right? Like every time we see, for example, a big NFT mint or a big ICO or something like that, you have market participants bidding up block space, for that time period, and regular users sometimes can't get they're just normal transactions to execute in a timely way. So I think that app chains allow a specific application to sort of escape that
Yeah.
fee auction and block auction. And so they're sacrificing some level of interoperability in exchange for a more predictable consumer experience for their users. And so I think it's just a trade-off. I don't think there's a right way or a wrong way. But I think for an application like DYDX, execution matters a lot, right?
Mhm.
You can't have derivatives trades failing because there's an ICO or something.
Yeah.
Um,
Some big
so
board ape mint or something like that, crushing your trades.
yeah, exactly.
Yeah.
So I think that in a case like DYDX, it's quite logical to me that the users value predictability and stability more than
Yeah.
interop. That's probably not the case for other types of apps. So that, this is why like these questions about the best way to scale or different architectures, they're very nuanced, and it's not one size fits all. I don't think there's like a silver bullet, and I don't think um, one way is best for every different type of application developer or user.
Yeah.
So I'm just glad every experiment's being run simultaneously. We have an open market, and eventually that market will figure it all out.
Yeah. Yeah. It almost does feel like if you are a founder in crypto, you are basically building from a ecosystem first perspective, then figuring out the app occasionally. So you're like, maybe I want to build on Ethereum, or I'm a Solana developer, and then you figure out the app. As opposed to traditional systems, which would say nobody says, "Hey, I'm building on AWS. Let me then figure out the app." You say, "Look, here's my wireframes. Here's my Figma. Here's what I'm trying to build. What's best for me? Where should I go build this?" And it does feel like it's kind of flipped sometimes in
You
crypto, but
think developers make those decisions based on something other than the best user experience? Because I think developers 100%
I
just
think now for the
build.
first
I think they're agnostic and they build for the
mm,
best user experience 100%.
Um, I would say yes, except for the fact that the user aggregation layer historically has been in crypto. It's been at the L1 layer. So whereas in traditional systems, that's not how it should actually work. It's like AWS doesn't have the user hasn't aggregated all of the users, so you don't go build on AWS for the users. In crypto, that's how it's worked. So you will actually go build. I think that you will build on something that is a worse user experience because they have the distribution. But that's a flawed system.
Yeah. I don't know if I would call that flawed. That's how just so many different things work. Um, it's we have so many different kind of legacy um, ways that there's distribution. Just like roads versus railways or something like that, right? And
Yeah.
you're always kind of trapped in those legacy distribution systems. Um, you know, People, it takes a long time to shift tech standards.
Mm.
Like people are going to always build on the best sort of distribution. Like getting distribution matters so much more than an elegant piece of technology, right?
How do you guys, how many portfolio companies do you guys have?
Probably, total investments we've ever made, probably around 200.
Around 200. So how do you think about it? Like if someone came to you today and they want to build in DeFi, they want to build a new, I don't know, perps market or something like that. Like, should they go build their own sovereign chain on Cosmos? Should they do it on Celestia? Should they go build on an L2? If it's on an L2, where should it be? Should it be on Solana? Like, how do you direct that guidance?
Well, it depends on what their goals are,
Yeah.
And broadly, it's just, what's going to allow you to get the most users the fastest and build a good product that's offering value to users.
Yeah.
So I often think that entrepreneurs and developers might have a better sense of that than even I do, right? But broadly, like we're very agnostic. I don't have a strong opinion other than like if you're building a consumer product, you need to just go get users, and your go-to-market approach matters a lot more than a very elegant castle in the sky piece of software that nobody can use.
Yeah, agreed. And it does seem like a lot of this is starting to get abstracted away. I had coffee this morning with this company Privy, the founder of Privy. They were the like embedded wallets inside of Friendtech, and it seems like a lot of that is the infrastructure is actually getting fixed there, or just getting not fixed, but getting improved upon. What about just one more question on this, Olaf, is like how much weight do you place on, I guess what I'd call narrative simplicity, which I would describe as like if you're a developer coming into Ethereum, you can choose Arbitrum, you can choose Optimism, ZK Sync, and so many others, as opposed to like, look, that's confusing. Let me just go build on Solana because it's or Avalanche or whatever, the simpler option. How much weight do you put on that?
Well, I mean, I think I don't know if it is simpler. Like, you might think it is, but
Yeah.
I like, again, it's like build where you think you can acquire users the fastest, right? Like this is complicated questions. You have to make a bet on where users will go. You have platform risk as a developer, right?
Yeah.
I mean, this is not that unique to crypto. Just across everything. Like if you're going to build, let's say on a social media network, it's like, do you build on Instagram or do you build on TikTok? And you do have to, on some level, have a prediction about where those platforms are going to be 5 years from now. In the early days of the internet, it was the decision to build on the internet instead of advertising in catalogs or something, right? Like there is platform risk as an entrepreneur. There's jurisdictional risk, right? If you're going to start a company in America, you probably should have some level of view about where that country is going to be in 5 or 10 years, right? So this never ends. Like as an entrepreneur, you're making a bunch of layered directional bets that you should have some view on.
Yeah.
I have views on these things, but the reality is, for me, it's clear because we're asking these questions that nobody has a definitive answer right now.
Yeah.
I can't look at a crystal ball and know exactly how this is going to play out. I kind of have a probability weighted view, is the way to put it.
What about maybe switching gears a little? What about leverage? So if you think about the last cycle, I think you could probably categorize this as like the cycle, the leverage driven cycle, whether it's BlockFi, Genesis, Celsius. The kind of list goes on, and that was, I think, actually great at the beginning. And it kickstarted a lot of things, but obviously ended up in flames. How do you think leverage evolves in the next cycle?
I think there's a lot of interaction between leverage and sort of like larger financial markets and like interest rates, for example. So the fact that during COVID, interest rates basically were at zero, there's a lot of capital available. I think that leads to, at a macro level, more leverage. I think if interest rates, go up, you probably see less leverage. If interest rates go down, you see more. I know it's a very basic observation, but I think it is a big part of what led to a lot of leverage in the previous cycle. And I think in general, crypto is a very reflexive asset. So what I mean by that is demand often goes up as price goes up, which is sort of against like microeconomics 101, right? Where if prices go up, you assume demand goes down. Here, demand in a sense goes up because the price going up sort of is the project. So as Bitcoin becomes more and more valuable, the probability of it succeeding as sort of an electronic gold or non-sovereign store of value is going up and up and up.
Yeah.
So you're in this interesting position where one thing I've said in the past is that the risk reward of buying Bitcoin is sort of equivalent at every price, because the price going up sort of is the project of becoming like this store of value system.
Yeah. What about another form of leverage, which is restaking? You mentioned eigenlayer. I'd just be curious to get your general views on restaking in the next cycle. And like the way that I've been kind of thinking about it is it's almost maybe this cycle's form of leverage within Ethereum, right? It's more claims on the same existing ETH, but be curious if you think that's the right framework to be looking at this, or just in general how you view restaking.
Yeah, I mean, I think one interesting thing is we're going to see very high kind of velocity of money in these systems, because you can rehypothecate the same unit of money to secure many, many different applications, pieces of middleware, and things like that. So I do think that with this restaking, you're going to see on assets like ETH that can do that restaking, potentially see very good yield, right? Where if you're securing many, many different pieces of middleware, including the main Ethereum chain, and you're getting paid to do it in each one of them, I think a big part of unlocking that is going to be slashing. And one tricky thing about proof of stake networks is the vast majority of the time when people are slashed, it's because of it like an administrative or operational mistake, right? It's not actually because they were trying to attack the system.
Yeah, they're not a malicious actor. It's
yes. Yeah. And of course, the protocol cannot tell intentionality, and so it can't really tell if you're like malicious or you just misconfigured your node. I think solving that problem is going to be a very big part of how we can get this sort of restaking ecosystem to be very big. Because if you can sort of solve that problem, through an insurance product or something else, there's lots of different approaches. It just means you can have your node, you could have it sort of like auto restake, right? And so you're just like, I'll sign up for every single piece of middleware that people can come up with. If that's the case, and I suspect that there's lots of different types of applications that could use the security afforded by an Ethereum-like system, I think you could see ETH become like a supercharged asset, right? Very. I know that's sort of a dumb way of putting it, but what I mean is getting yield from lots and lots of different places all at once.
Because all these other blockchains will want to rent one of the most valuable things in crypto, which becomes ETH security. So ETH starts exporting security to other like dApps and blockchains and stuff like that, and ETH just becomes this, what do you call it, supercharged asset because of that. Is that the right thesis?
Yeah, basically. I mean, every type of middleware that needs the security afforded by this massive system just pays those restaking nodes for it. So you also get I think a more precise marketplace for how to value that security. Today, I don't think these things are priced in a super efficient way.
Yeah.
In part because nobody really knows what they're worth.
Yeah. Do you think we'll see more and more, I guess if you extend that out enough, like more and more L1s? Like I saw Cello, which used to be an L1, is now becoming an L2, like being a little more ETH aligned. Will that trend continue, do you think?
Yes.
Why?
Yeah, I mean, I think that it's become very clear bootstrapping your own blockchain system, getting distribution to users, nodes, having an asset that's liquid, having a stable system that people can build on, having developers take that sort of platform risk on your system. It's all really, really hard. And so I think that it's become clear, launching your own blockchain is a very difficult proposition.
Yeah.
Whereas, plugging into an existing system, obviously much easier. So I think we will likely see that migration continue. I also think that future launches will be much more likely to be just, say, a layer 2 system or on a layer 2 system, like an existing one, like Arbitrum, instead of trying to build their own sovereign trust network.
Yeah. This is a totally out of left field question, like switching gears a little bit, but how excited are you about Bitcoin still?
Oh, very. I mean, I think Bitcoin has carved out a very clear value proposition, which is, not doing anything.
Yeah.
And I think there's no, but I'm serious. I think there's real value to that. Governance, quote, you can really view as a security vulnerability, right? And that system being able to change at all in any capacity, you could view as a security risk, which I think is appropriate. So in the context of Bitcoin, just the assurance that it is what it is, I think is the right way for it to be positioned in the market.
Yeah. Do you think something like, or I don't know, have you been paying attention to ordinals and the resurgence of ordinals and fees on Bitcoin? Have you been following this?
Yeah, I think that, building all this stuff on top of Bitcoin makes no sense to me.
Okay. That's, yeah, it feels foolish to me. It feels like try to be, you've got the best product market fit in all of crypto right now, arguably outside of maybe that or stable coins, and stop trying to be something that you're not.
Yeah, I mean, nobody controls Bitcoin. Yeah, like,
no, of
I think
course,
it's
yeah,
just
of course.
important.
There's no CEO making the decision.
I just think it's
build.
important to point out that this is just an absolutely chaotic, permissionless market where anyone can do anything anywhere.
Yeah.
So it's it's hard to say, don't change the Bitcoin narrative or something. Like, nobody controls that. But I do think, just from an entrepreneur perspective, it's like, why try to build on this platform, apps that already were built and exist on other systems, and have for years. It's like, it doesn't make any sense to me.
All right, everyone. So we talk a lot about the institutions coming into crypto on Empire. Santi and I are both headed out to London, March 18th to 20th for Blockworks' 8th ever Digital Asset Summit, DAS. This is an institutional buttoned up conference that we've hosted since 2019. I like to joke that it is probably the last remaining kind of suit and tie event in crypto. People are still wearing suit and tie. It's pretty funny, but you'll actually hear from a lot of the largest institutions in the world, coming from Standard Charter, FIS, JP Morgan, Framework folks coming out, Wintermute, Van Eck, Goldman Sachs. There are a couple big themes of this conference. 1, Bitcoin catalysts, the halving and the spot ETF. 2, a view from the buy side. 3, RWA's tokenization and stablecoins. 4, global regulatory frameworks. 5, institutional infrastructure, including banking and payments. And 6, the macro case for crypto. If you have anything to do with the institutional side of crypto, you have to be there. Santi and I got your back. We hooked you up with a 20% off code. It is Empire20. There is a little competition running internally at Blockworks to see who can drive the most number of tickets. So help Santi and I out. Register with our code and you get 20% off. That is Empire20. This episode is brought to you by Toku. Toku makes implementing global token compensation and incentive awards simple. With Toku, you get unmatched tax and legal support to grant and administer your global team's tokens. From easy to use token grant award templates through token vesting to managing tax withholdings, Toku understands every grant structure: token purchase agreements, restricted token awards, restricted token units, token options, token appreciation rights, and even phantom tokens. For legal, finance, and HR teams, it is a huge, complex task to have to comply with global regulations around compensating people with tokens, not to mention the payroll, tax obligations, tax reporting in every country that you employ someone. It is difficult, time-consuming, manual, and costly, and it is drawing more and more attention from regulators and governments. Toku makes this simple for leading teams across the space: Protocol Labs, DYDX Foundation, Mina Foundation, Hedera, Gnosis, Safe, Gitcoin, and a lot more. Reach out to Toku at toku.com/empire or click the link in the description. When did you get, I guess, quotes around, get into crypto, Olaf? You said 2012?
In the 2011.
2011. What do you think of in terms of, if you had to categorize the first 10 years of being in crypto versus maybe the next 10 years, what do you think are the kind of key differences between what the industry used to look like versus what it will look like?
I mean, I think the first one is that, I mean, it wasn't an industry, it was just an open source software
Yeah.
project. And I think it was in just total obscurity,
Yeah.
like real obscurity, until 2017. And even then it was quite niche. I think 2021 was the first moment where we saw a glimmer of, real mainstream awareness of this whole thing. The next 10 years are going to be defined more by institutional acceptance and adoption, and what that looks like. And I think that just means how different geographies react to this. It means how companies like, say, Coinbase scale, and how they, grow internationally or work with regulators. It's building just a lot more in public,
Yeah.
right? People are paying attention. A lot more people care about this. But I mostly think that the first, set part of this project was a bit ideological. Like most market participants joined for ideological reasons, or they were, interested in the tech or something. I think the next wave of users are just pragmatists, right? Like they don't
Not
care.
coming in for the ideology of.
Yeah, they're here to accomplish a very clear goal, and this thing is a tool for them.
Yeah.
It's not like an end in itself. So I think that at a very high level is probably the biggest shift.
Yeah. What do you think some of those products will be? I mean, the argument I think is the first 10 years people came in for this ideological. It was an ideological user base. Maybe you were a libertarian, maybe you were, down with the banks, whatever it may be. But now the next 10 years you'll have these pragmatists who are coming in who have no interest in the ideology. They just want good products. What do you, I guess from a product perspective, what gets you excited there?
Yeah, I think this is a pretty common opinion, but I think it is my opinion overall. It's probably social media systems that have a financial incentive layer.
Like a friend
And
tech, essentially. Yeah.
yeah, like I mentioned, there have been multiple attempts in this category. Steam it, BitClout, FriendTech. What I've seen is that there is a spark there, right? I've seen lots of regular non-crypto users sign up to these apps, and there is something there
Mm.
for real. I think getting the form factor right. It's not clear that we have gotten it right, but something there I think is possible to get to global scale, like billion plus users. The second category, is also is gaming basically. And it's very similar, right? It's adding a financial incentive layer to the already existing application logic in a video game.
Mm.
So it's not like reinventing per se video games or social media. It's just adding a financial incentive layer
Mm.
to a lot of the user behaviors that already exist there.
So for SocialFi, you get less excited about this idea of like, you can't get canceled or you can't get you can own your own data. You get less excited about that, more excited about look, they're basically embedding financial markets into social platforms. Yeah.
Yeah, definitely.
Yeah.
The average user doesn't care about
Oh,
censorship
I agree. I agree.
resistance
I think that's always
on
been
there.
a foolish value
But,
prop
like,
of
the average
yeah.
user that says, "Oh, wow, like, I have, a small influencer following on some XYZ platform, and if I sign up to this new one, there's, like, $80 waiting for me," or
Yeah.
something, right? Like,
Or
that
just the
that
ability
matters.
to I mean, how many of your I don't know if you do this, but I have friends who will or I'll do this. Either it's like I do it with music and I'll do it with accounts where it's like, oh, I found that song early. Like I found Fred again early on or something. Or so the ability to bet there or the ability to say like, hey, there's this big Instagram account, they have 500,000 followers and I'm like, oh, I found them when they had 2,000 followers. Yeah. Yeah.
Yes, exactly. The ability to turn, all of these mechanisms into
Yeah.
markets it's very clear how that's could be compelling to your average user. Like, imagine if you could get paid for being the best TikTok scroller, right? Like, the number of people that are already competing in that without getting paid is, in the hundreds of millions and billions.
Yeah.
So, if we can add markets to things like curation of content, like I said, we already have massive scale content curation systems out here. And it's just adding a financial incentive layer to a lot of these behaviors that already exist. And I think that adding that financial incentive layer can also like extend the sophistication um, of these systems, um, and also lead to kind of new behaviors that maybe
Mm.
are a level of work people were unwilling to do voluntarily.
Yeah. It reminds me
Yeah.
of this tweet that you sent. I don't know, I forget when it was a while ago. It was like over time the lines will blur between playing a crypto embedded video game and working a job.
Yep. Yeah, exactly. I mean, it's, um, in a sense, like you and I already work for Bitcoin. Um, and I think that, this just gets extended more and more and more, where you can embed if you can basically align a sort of work or output with a financial reward in a protocol, you basically get a bunch of people working for that protocol, right?
Mm.
Um, and I think that the people that um, are playing around in video games where they're getting rewarded for playing the game, um, like sometimes that sort of quote useless, and what I mean is that the video game isn't doing anything per se, it's like an end in
Yeah.
itself, but I think there's other mechanisms where you can make the behavior a means to an end.
Yeah.
So, for example, labeling to train a machine learning algorithm, where you think you're playing like this little picture game, but you're really actually like contributing to a labeling system for a machine learning system.
Like
Or, I'm
captures.
just that's just off the top of my head, but it's where you have a gamified, financialized like experience that actually is work for somebody or
Yeah.
something.
Yeah, no different than captchas, right? So
Yeah.
you guys have been doing a ton of research and work and investing in privacy. But like the best part about friend tech and the worst part was that you could see everyone who was buying and also on the flip side, selling your shares, right? So I remember I was having dinner with someone who I thought was a buddy, and he sold my shares. But like 2 hours before the dinner, and that should be. I'm half joking about that, but also I remember being like, oh man, he's selling my shares, and I'm curious how you think about just like, okay, there'll be financial markets for all, not just in financial markets, how we historically think of them, but in social markets and things like that. How do you think about like privacy? And would love to just hear like the work that you guys have been doing in the privacy space.
Yeah. So I think that um, you know, privacy by default is obviously, to me, very
Mm,
important, for everything. And I think the ability to opt out of it, and sort of reveal, um, is can be very important in certain circumstances as well. Um, but broadly, like for this to go mainstream, in a big way, we need privacy, right? We need businesses to be able to have, um, bank accounts that aren't public balances, or spending, that isn't public, or the ability to sell your friend's friend tech key or something, privately. So,
mm,
yeah, I mean, I think privacy is going to be critical here for, long-term success. I think that, as was revealed with the growth of the internet, on average, people don't care about it that
yeah,
much. By default, we don't have very good privacy on the internet, in sort of non-crypto
yeah,
apps. Um, I think we have an opportunity to kind of fix that with crypto, but so far it's clear that it's playing out the same
yeah.
way. People on average don't care that much. But I think that, getting to global scale, it's a very important component of
Yeah.
this.
All right. So we talked social fi, leverage, restaking. I guess those are like those almost feel semi-obvious to me in the next 1 to 2 years that like they'll continue. What are some things that you're I guess when I think of you and like Polychain, I've always thought of you as being someone who's good at thinking on the margins of society.
Mhm.
I'd just be curious, like crypto or non-crypto, like what are some things that you're paying attention to on the margin and like on the fringes that maybe are starting to seem obvious to you that don't seem obvious to other people yet?
Yeah. Um, I mean, I'm very excited about, um, like, wearables, that can so there's a surgical approach to, like a Neuralink
Right.
type surgical
Which is
approach
going into FDA
to.
trials, I think, right, this week?
Yep. With sort of embedding, computer augmented capacity to the human brain directly, right? Um, there's a different approach, which is using wearables, so it's non-surgical. And usually this category, is based on a kind of new research, that's called focused ultrasound. Um, I think that's a very big deal, because if you can get that to work, it means that, developers could program, brain states, basically. Like, you'd have the ability to programmably say, I want to be alert, or I want to be sleepy, or I want to be relaxed, or I want to be whatever, right? If we can build that thing, people are going to put that on and they're never going to take it off. It's like bigger than mobile phones to me, if
What
it
is the
works.
this?
Um,
Focused ultrasound?
it's a wearable version of, something that can use focus ultrasound, which it basically stimulates, in a research setting with cubic millimeter accuracy, specific parts of the brain.
Hmm,
So it's related to transcranial magnetic stimulation, um, which is what we've kind of used today, to activate different parts of the brain, using an external device. It's substantially, better at targeting a certain area,
hmm.
than traditional transcranial magnetic stimulation. And so it's still kind of in the research phase. It's this is pretty far from being like commercially available in a consumer product. But if it does work, um, it's a very big
Hmm.
deal, because you're going to be able to put this thing on, and basically program, whatever type of brain state you wanna be in. Like, if you wanna be sleepy, you wanna be relaxed, you wanna be alert and
I
awake.
imagine it'd also be I
Uh,
mean, I know nothing about this, I'm hearing about it for the first time, but I'll look into it, but I imagine it would be not just helpful for your states that you're in, but also I mean, if you can target that deep that specific of an area layers deep into the brain, you can probably start to remove some bad stuff, whether it's like a tumor or something like that.
um, yeah, I don't yeah, it doesn't quite work like that. It's more like it's just stimulating,
Mm,
a very specific region of the brain.
that's cool.
Um, but I'm very excited too about surgical approaches. The problem is, like, the go to market. with the surgical approach is
Yeah.
obviously tricky from multiple angles. There's a regulatory issue. There's just like a consumer trust issue. It's going to take a really long time to get everyone feeling comfortable with like surgical brain implants. Especially this feeling that, wait, I got like version 1.
Yeah.
Should I have waited for version 2 or things like that? I think just the surgical approach, I'm very excited about it, but it seems tricky to go mainstream with that quickly. This wearable approach, if it works, it's a really, it seems pretty easy. And the other thing that's nice about it is if like you don't like the way it makes you feel or something, or it gets hacked or something, you can just take it
Yeah.
off. So there's no
Mhm.
like um surgical implant that's like just kind of in there. Um so I'm excited about that when it comes to wearables. Um I think that, yeah, if I was going to say one category I think people aren't looking at very much, it would be
What
that.
about inside of crypto?
Inside of crypto, I think there's a lot of awareness around Eigenlayer, but I think that it is still underhyped, sort of, for how big a deal it is, because it allows you to take this security afforded by Ethereum that we pay billions and billions of dollars for every year in the form of miner rewards or validator rewards. It allows you to apply that security to arbitrary application logic, right? Um, so I think that's a really big deal, and I think we're going to see a lot of things launch that wouldn't have if not for Eigenlayer. Um,
Like what, Olaf? Or
um,
like what does that unlock that we couldn't do before?
I mean, any so this is what makes it a big deal, is that it's very hard to imagine all the ways it will get used.
Yeah.
Um, like the fact that um, in the past, to get that level of trust, you had to launch a crypto asset um, with the kind of peer-to-peer network attached to it and get the asset to have value and liquidity, and get developers to sort of build on top of your platform. It's very tricky, right, to execute and get right. Um, the ability to sort of take away all that and just plug into Eigenlayer and say, oh, all of a sudden my application has nation state level security, right? Like it's got protection from any sort of attacker or hacker. Um, it's hard to imagine all the different types of apps that either exist today and would move to an Eigenlayer like system or will be uniquely enabled by this, existing. A simple example is like an Oracle system.
Yeah.
Feeding a price into that's not endogenous to a blockchain into a blockchain is actually really, really hard.
Yeah.
Um, it's sort of an equivalent problem of feeding a valid block into a blockchain, right? Where sort of by definition, there's a huge financial incentive to feed in bad data, and you have the whole system is basically designed to validate the legitimacy of this one piece of data that's like not inside the system and add it to the system. Um, so it's really, really hard to build. With Eigenlayer, it's very easy to build, right?
Yeah.
Something like an Oracle system.
Hmm. Maybe we can come back to this idea that we started with about cycles as we like think about wrapping this up. So I listened back to this episode that we did back in May 2022, and you said this line. You said, "Now begins the era of buying, not selling," and I think that was a pretty good call. Maybe I'd ask the inverse of that, which is like, how do you think about selling, not buying, and like
Yeah.
when to start thinking about that?
Yeah. I mean, I don't sell. Like I think that this is a one-way street. Um, to be honest. Like I know that it sounds maybe ludicrous to people, but I really think that crypto assets will outlive um, you know, fiat money in the long term. So to me um it's like a one-way street. The goal is not to um you know, go from dollars into Bitcoin back to dollars. It's like just to convert into crypto.
Yeah. So I get that. I actually agree with you. I had this debate with Santiago, who couldn't make it today, on the last like roundup podcast that we did. But I don't sell. Like I don't sell my Bitcoin. I don't sell my ETH. I'm not like trying to like trade in and out to stack more Sats. Like I don't do that. And he was arguing that you should have a price target on everything. The counter, so I actually really agree with you. The counter I might have though is like you have LPs that you have to report to. So price of ETH hits $20,000 in this cycle. Like, do you think about taking any money off the top to like because you have to send a quarterly investor report or something
Mhm.
to Polychain, LPs or no?
My investors know that I'm long only.
Well,
So um, it's to me actually a one-way street. It's
well,
genuinely a vortex for the entire world's capital and all the money that exists out there. I think it is the greatest wealth redistribution that will happen of the modern era. And I think in hindsight, we will look back on it as being obvious. Um, but we're in it right now, and it can be quite confusing. Um, Even though, so far when I look at the um, validation, right? Um, we've seen just this incredible growth. It's sort of inarguably been the best investment category of the last decade. Um, and I have very little reason to believe anything has changed. Like my initial thesis around this category, I developed, over 10 years ago, and it's basically just played out. It's also expanded substantially because back then I did not foresee that arbitrary programmable logic could be executed inside these secure blockchain systems. Like I assumed it was just about um, this one asset and a kind of payment system for that asset. I did not foresee things like synthetic assets or marketplaces for trading or lending being actually embedded inside blockchains, right? So it's expanded from just money to money and finance. And now I think it's expanding to like money, finance, and application logic, right? So I think it's turned out to only be bigger and broader than I could have ever expected. Um,
hmm.
and I just need a really convincing reason to change my view because it's
Yeah.
been nothing but validated.
So I'm not here to try to convince you of that. I'd be curious though, like one more question on that note would be on a macro scale. I very much agree with you, and like, so I also don't really sell things, but I'm curious how you think about. So like Bitcoin, ETH never sell. Maybe you have like a couple other assets you're never selling. Do you have other things in your portfolio where you say, look, there is something that could cause me to sell? I don't want to name any names, but like insert project here, like ETH, Bitcoin, I'll never sell, but this and this, like, maybe in this cycle I'll sell it. Or if you're taking a position on something, you just don't sell it.
Well, it's all fastest horse, right? So
Yeah.
like when I say long only, I mean like long crypto.
Long, well,
I
that's
don't
what I'm saying. I know you're long
Yeah.
crypto, but on a
And
micro
then
scale, thing to thing.
you have some level of diversification inside crypto, and then you want to have the fastest horse inside crypto.
Yeah.
Um, but I think one thing that, your friend who says you want to sell the thing, like they're still trapped in this idea that there is a foundational unit of account that's sort of like cosmic or something when there isn't. There's just relative value between different assets. Like there is no
Mm.
default go back to thing. It's just the dollar is just another asset. And it's has a lot of liquidity. Um, but every asset is only valuable relative to every other asset.
Yeah.
And you just want to own the fastest horse, um, if you're growing a portfolio. So to me, it's the whole idea to be in crypto is because I think it's the fastest horse category. And then inside the portfolio, you want to have some level of diversification to make sure
Yeah.
um, you're diversified a bit, and then you just want to own the fastest horse inside crypto. So um, I know I didn't answer your question directly, but that's
You
all
did
good.
actually. You did. This is maybe too personal of a question. We can cut this out of the podcast episode if you want to. But Do you own assets outside of crypto? Do you own stocks? Do you own real estate? Do you own or is it all crypto?
Yeah, I do, but the vast majority is crypto.
Hmm. Olaf, man, this is an awesome conversation. Anything that we didn't talk about that you really wanted to cover? Plans for Polychain, topics inside of crypto, anything we missed?
Um, I think we covered a lot. There's there's always more to cover, but I think
Hmm.
we covered a lot of the big topics here.
All right. Thanks for coming on, man. Always a pleasure.
Yeah, thanks for having me.
Hey everyone, thank you so much for watching today's episode. Really hope you enjoyed it. We wanted to take a second to just remind you about our upcoming Digital Asset Summit in London, March 18th to 20th. Santi and I got your back. Seats are limited, and we hooked you up with a 20% off discount code. It is Empire20. If you heard it earlier in the podcast, there's a little competition running at Blockworks to see who can drive the most number of tickets. So when you register for the Digital Asset Summit, make sure you use our code Empire20. See you in London.